Money at Work continuing educational series. Today's installment and today's episode centers around risk, but more importantly, a possible hidden risk in your financial plan that you don't even know exists and under certain conditions can cause major financial impacts to you, your family, and your financial future. Overall risk, when you look at it, there's three ways to approach it. You can eliminate risk, you can manage risk, and you can do what far too many people do and just totally ignore the risk. But like I said, today we're talking about a hidden risk in the financial plan many do not know even exist. Life insurance. Let's first start off by just admitting life insurance is not a fun topic. It's not a fun buy. There's no emotional attachment that's going to make you excited about the process, but it is a key piece of financial planning under the protection block are the money milestone for protection. So if you do not have life insurance, you can qualify, especially if people are counting on you and your income going forward. You need to address that. But today, we're talking about millions of people who have existing life insurance, but unfortunately, in the past number of years, from the product cycles and the product innovation that have come to the life insurance industry, lots of people are now holding traditional life insurance, which we consider to be an obsolete product. And so they have the wrong kind of life insurance, and they just don't even know about it. Starting off, we have to realize that we're already stressed out about money. Under this survey, 72% of adults said they were stressed out about money in the last month. Well, if we take that into consideration and then add on income disruption, increased expenses from medical events, it causes financial chaos, financial destruction, bankruptcy, all of these negative outcomes that we don't want in our financial future. So if we're starting here and we understand the probability going forward of what could happen, this is why this is such an important thing to evaluate and get taken care of. Living benefits is the answer to this. The reason is, the average age of a heart attack, stroke, cancer is 43. It killed previous generations. We're living through it for the most part, so we'll survive. But like we talked about, there's financial chaos, destruction, bankruptcy that goes along with that survival. So we need to address this issue before it actually comes up, because what happens is a lot of people, wait until it's too late, meaning that the event happens, they review, find out they have the wrong kind of insurance. There's nothing they can do about it at that point. As you're reviewing this recording, people are having heart attacks, people are having strokes, people are having cancer diagnosis. So the probability and the possibility one of these things can happen to us exists right now. And then as you look forward in the future, within the next 20 years, depending on what age we are right now, chance of a critical illness, probability or possibility grows, and in some age groups grows exponentially. And that, once again, is the medical event that can possibly happen in terms of things like heart attack, cancer, stroke, dialysis. The death benefit of traditional life insurance, combined with the ability to access a percentage of that face value while you're still alive for living benefits in the case of terminal illness, chronic illness, and critical illness, addresses that hidden danger that so many people have and the hidden risk that so many people are not aware of in their financial plan. It works because as we have income disruption and as we have new expenses coming in from these medical events, typically what happens is those two converging forces, they act against each other. And like I said, it causes financial chaos, destruction, bankruptcy, etc. What the living benefits does, it gives you access and bridges a capital during this particular period of time that can help income replacement, can help absorb some of those new expenses, and it can provide like a parallel for a period of time. So we get through this, that we rehabilitate, we come out of this okay, and that our financial plan is still intact and not in ruins. Remember, it's not just life insurance. Life insurance is important, but it's also to have the living benefits attached. It's a new kind of life insurance. You don't have to die to use life insurance for life, for living things and events that can happen to us. Another big reason why this works is because of the cost factor. Remember, Traditionally, when we had that life insurance policy, if we wanted to go through and try to hedge the risk of some of these life events, we needed long-term care. We needed disability. We needed cancer. We needed a critical care policy. You can see that starting to add all of these individual policies up in a basket of supplemental policies is a very expensive approach. Another flaw with that approach is a lot of these supplemental policies were very limited in what they actually paid out in terms of the benefits if you had one of these events happen. Getting a life insurance policy with the living benefits riders, it's a better value, saves you money on the front end, and it can save your financial plan and your financial future going forward if you have one of these events happen. MillionaireMindset.life. You want to stretch your thinking, create your vision, and achieve. We've got lots of information about the foundations of money, mindset, retirement, investments, entrepreneurship, and much more.